All right, all right. It's Wednesday morning, and let's see what the tea leaves tell us. Well, we're down 50. Let's see what that looks like on the S&P right now. Open this up a little bit, and here we go. So here's our move down. A little retrace. We're down 50. Um, that that kind of puts us at yesterday's low. We closed at 64. Yeah, it puts us right around yesterday's low. We're flirting with that right now. The futures went down below that a little bit. We'll probably do it. I mean, yeah, I wouldn't mind closing this gap up and maybe consolidating around here. I know that I got that target of 33.65. I think that's a good target. Or 33.10, I think it was yesterday. We could take another look. Or you could go listen to the video. That's a better idea. Listen to the video. I need the watch hours. So that's it. We got the Fed talking. Fed talk. We got the Fed talking. Do we have the Fed talking? What do we close those pages? Um, think here's some Fed speak. He talks at 9:30. He's testifying. He's going to testify most of the day, I believe. And then we have him again tomorrow. So it might be whippy based on what the guy says. You may want to can't find CNBC. Oh, there you go. You may want to sit on your hands or just be careful if you're day trading. And really nothing going on in the news. Kramer's barking again. Where's his article? Well, he said that the Fed can't do what he's got. The Fed can't fight inflation if the market yesterday's market rally continues. Which here's another cat throwing a demand solution to a supply problem. That's just silly. It's just silly. I don't think they have a clue. Something's got to work out. It's a supply issue, and they got to resolve that. So in the market, I got this big old wedge going on right here, and that's what I'm keeping an eye on. This big old wedge, and what this line is very interesting. Okay, so here's the market in this very natural progression. Upward. And I believe I went back about 10 years, and you get this kind of natural progression where the market kind of gravitates around this line up and down. And this is the pandemic, and this is the ridiculous snapback after the pandemic. So it appears now that the market has pulled back to this natural progression. And if you were in the market in 2020, you're still doing better. I mean, if you got in at the highs of 2020, you're still doing better today than back then. So it's not terrible. There's not really a deterioration of wealth. It's probably beating the crap out of the short-term traders and swing traders and people who came into the market, around this area. But for the most part, I mean, this is a relatively good-looking market. Um, you know, this run-up was ridiculous. We have a nice 50% retrace. We've hit the 61%, 61.8, on the Fibonacci. And that's a pretty good retrace too. I do believe that we're coming down to about the 3310 area. So I'm going to keep my eye out for that. And again, we're really not that far away. We're only 400 points. I mean, we could see that in 3 days, the way this market moves. So I'm just going to watch for that. But this is an interesting area to watch. Watch for the development. Look at the momentum. Right now, the momentum is very bearish. But watch the momentum and see how the market develops around here. We have this other gap down at the 35 area. And then my 3310 area is just, look at that, good solid consolidation. It's a good place to build a foundation. A lot of interesting things went on around this area. Here's a gap back here. You can see we kind of push up and push off, back and forth. So very interesting area for me. Wouldn't be surprised if we see that. But that's a pretty tremendous retrace of all of this nonsense we have. And given the geopolitical risks and the bozo in office and the supply issues, it's pretty reasonable that we come down and take all this back. But honestly, I don't see it getting worse than that. We do have some gaps to fill down here, but I mean, we got to have some serious problems. Serious problems. So that's what I'm looking at on the long term. That's what's got my attention. On the short term, um, we're already down here. We're probably closing this gap, so we're gonna have to see what happens to see if there's a trade in it. Um, I mean, a break of this low with the momentum fading would have told you that that was a short. It happened overnight. We're currently down around this area. Yep, and we're holding there right now. So that's it, man. That's what it looks like. I mean, I'm not making any moves. Too many variables out in the market. Here's the VIX. It's spiked up. It's fading off. That may calm down a little bit. Today's the 22nd, right? BTC. Now everybody's screaming for 13,000. I think they're watching my videos. Close that out. Yeah, well, that's maybe 14, 13. Could be the bottom. Momentum's still very bearish. I don't see a bottom right now, and it's not a fundamental issue. It's not, it's not a regulatory issue. The thing's not falling apart. Um, all it is risk off, lack of buyers. Really, that's it. It's not even aggressive selling. It's just lack of buyers. So I wouldn't sweat it. All right. That being said, I'm not going to babble. I gave you a good long one yesterday. Subscribe, hit the bell, hit the like, add some comments. I appreciate any participation. So calm, cool, relaxed, and good luck with your trades.